Welcome to the Crypto Squared podcast, where finance meets the future. In a world where digital currencies and traditional markets intersect, we're here to demystify the buzz, bridge the gap, and bring you insights from the leading minds at the forefront of both realms. From Bitcoin to bonds, Ethereum to equities, we're uncovering the potential, the pitfalls, and the pathways that are shaping the future of money. Prepare to challenge your perceptions, ignite your curiosity, and inspire your investment journey. This is Crypto Squared, where two worlds converge to create a new vision of finance. Brought to you by MidSquare.
Good morning, everybody, and welcome to the Crypto Squared podcast hosted by MidSquare. I am Nelson Naidu, one of the founders of MidSquare, and I am delighted to have with me on the show today Mick Burke from Fireblocks. You can't have any discussions about crypto without understanding really some of the fundamental building blocks of security in crypto. It's probably one of the most important things to figure out in the digital asset space compared to traditional assets, where my background and the founders of MidSquare are traditionally from. And one of the things that we had to figure out early on in our journey was how to think about security and understand security. And Mick probably won't tell you, but we had to ask him a lot of dumb questions up front about Fireblocks and their value proposition. But you'll often hear things like personal keys, private keys, self-custody, wallets. And the aim of today's discussion with Mick is to unpack some of those concepts at a simplistic level, especially for those of you who are less familiar with crypto and some of the concepts in crypto. We're trying to really get you a little bit of a high-level understanding of what security is all about in the crypto world. So Mick, welcome to the show. Thanks for joining us. Really, really a pleasure to have you here. Where are you calling in from today?
Thank you so much for having me, Nelson, and it's a pleasure to be here. Calling in from a sunny London, actually. We're on the cusp of spring here. Sadly, I know you're ending your summer months in South Africa, but yeah, calling in from London, where our EMEA HQ is based.
Yeah, very, very seldom hear people say they're calling in from a sunny London, so happy to hear that. And you're absolutely right. We are heading into autumn, and soon the winter will be upon us. So Mick, I think it'll be great if you can just share with us a little bit about your background and how you ended up in the crypto rabbit hole. It's always something interesting for us to understand is how people end up in the crypto world.
For sure, like most people, I think it was by chance or by mistake. So how I ended up in kind of blockchain crypto world, I was doing my master's in management consulting, and part of that master's was kind of like a project with a company called Deloitte, which I'm sure many people will know who Deloitte are. And this project was focused on understanding the different value of blockchain for use cases within traditional finance, supply chain, and that sort of world, and I was selected as part of a group to focus on that specific use case, and ever since then I was kind of naturally interested in the kind of concept of cryptocurrency and the use cases that blockchain solves for, and really just the innovation that came with that whole aspect of blockchain and cryptocurrency. So that was really my first foray into that space. I then went on to actually join Deloitte as a graduate after finishing university, where I worked for their kind of consulting business for about 4 years. The first 2 years, unfortunately, weren't in the blockchain or crypto space. It was pure strategic consulting with big banks on process improvement projects, which are great for kind of a first job out of college, but really wasn't something that I was interested in focusing on long term. And at that time, interestingly enough, the Deloitte team in Dublin, where I initially started working, was starting a blockchain research and development team called the Blockchain Lab, and this later became the EMEA Center of Excellence for all blockchain related activities for Deloitte. So a really kind of big investment from the Deloitte partners to look at this and to look at blockchain and crypto in more serious detail. So after kind of sweetening up the partners and the directors that managed that team, I managed to find a space in that Blockchain Lab team, where I worked there for about 2 years. focusing on, again, use cases that were, that were really kind of quite new. So looking at how blockchain could solve for supply chain traceability, looking at how blockchain could provide kind of like verifiable credentials, and really interesting stuff. It was quite early on in the space for, production projects. This was around like 2016, 2017. So yeah, but I mean, all in all, it was a great experience, a great first professional experience into the kind of blockchain and crypto world. And yeah, I'm very kind of very close with the people that work there. I actually work with a colleague of mine in Fireblocks now, who was part of that blockchain team. So it's amazing how small the blockchain and crypto circle is, and how you can be lucky enough to work with people that you did before in the past. So that was really kind of the first professional experience. After that, I moved to London, which was about almost 5 years ago, and I joined a company called R3. Some of your listeners may be familiar with R3. They built the Corda platform, which is a private permissioned distributed ledger technology. So a lot of the use cases there, again, were traditional finance focused around using Corda for post-trade efficiencies, and really kind of speeding up the process with with how it's done today, right? So in today's world, it's very siloed. It takes a long time for trades to settle, T+2, T+3. So really looking at how blockchain can solve to have T+0 settlement. So that was again a much more deeper focused role within kind of blockchain. It wasn't really so much crypto specific. It was more kind of just DLT focused projects, tokenization, as well as CBDC. So yeah, that again was another level of innovation that I was just not aware of in the space. And it's interesting, kind of as I've moved along in my career, the level of focus kind of gets more and more deep, and you kind of uncover how complex and interesting this space is. And I've been in the space now for almost 7 or 8 years, and every day I feel like I'm learning something new. So I can only imagine what it's like coming into the space as a complete newcomer with all these concepts and stuff like that. But don't feel alone, because I still feel like a bit of a noob or a newcomer on a day-to-day basis, and even speaking to some of the smarter people in Fireblocks will always kind of keep me grounded. But yeah, that was kind of my second jaunt into the blockchain and DLT space. Again, worked with some really interesting and smart people there. But really what I found I was needing to focus on was more on the kind of crypto angle. And obviously, with Fireblocks, the kind of remit of the use cases that we focus on here is so vast, right? You could be looking at an exchange, looking to implement wallets for their retail users. You could be talking to a big bank who wants to implement a tokenized security. You could be talking to a Web3 company who wants to issue NFTs to their customers. So that really kind of, in my mind, felt like something that was interesting to focus on next. And obviously you have the traditional finance side, but you also have the kind of crypto native side, whereby you've innovators such as the likes of Revolut, Robinhood, who are clients of Fireblocks, that are really kind of pushing the margin in terms of innovation within this space, and offering kind of new and cool ways for the likes of myself and yourself to easily invest in crypto. Yep. So that's kind of the journey so far. It's definitely not over yet, but yeah, that's it today.
Thank you. Very cool. A couple of interesting things there. So you say Deloitte had the blockchain lab in 2016 already. Quite forward thinking from them.
Yeah, it was. It was initially kind of a grant that they got from the kind of the wider European group of partners to focus on different use cases. Like I said, the kind of supply chain, the traditional finance use cases, and as they saw demand grow across the client base within EMEA, it was kind of a no-brainer to kind of really put resources and capital behind funding this project to ultimately drive a new revenue stream in Deloitte, right? Because obviously you have accounting, tax, corporate finance, and then the blockchain consulting element of it was another interesting way to kind of really drive innovation and really kind of help our clients, Deloitte's clients, should I say, back then, to realize the potential of blockchain and cryptocurrency. But yeah, it was still very nascent. But I believe Deloitte were one of the first big four to really focus on a live production project for a company called DMVGL. All this information is public, so yeah, really kind of driving the innovation back 2016, 2017.
Okay, and if I listen to like some of the use cases and the projects, would it be fair to say that a lot of the work in blockchain at that time, as relates to the world of finance, was very much around trying to improve the efficiencies of traditional finance processes, let's say contrasted to post 2020 and the DeFi summer, where blockchains are now looking at, let's say, reinventing finance entirely in a decentralized world? Is that a fair assessment?
Yeah, I think the summer of DeFi definitely amplified the interest for all sort of participants in the ecosystem, not just traditional finance, but retail users as well. But yeah, I think back in 2016, 2017, 2018, I wasn't particularly focused on the DeFi space as much as probably I am now. And that was just kind of down to the nature of the working environment that I was in, right? It was more kind of big corporates, big banks that were really kind of just dipping their toes in the space. And I think if they were to start trading on a DEX, I think that was probably going to be way too much too soon, and probably would never get approved by the relevant compliance teams and the banks and corporates that we were working with at the time. So, but yeah, I think as the years go by, you can see these trends emerge, and specifically the last year or two, you see all the Bitcoin ETFs being released, which is now really kind of brought in the attention of the institutional participants that were kind of on the sidelines. Some were involved, but now you see a big inflow of them. And obviously now stable coins being kind of a mechanism to transfer value across the world in a much kind of cheaper, faster, quicker way. Whereas back, a couple of years ago, it was like, hey, we just want to set up an exchange, we want to offer crypto. And now you're kind of seeing the hard work over the last couple of years really show its value with projects such as tokenization of bonds, of real estate, of assets, and then obviously the other use cases that come with that as well.
Okay, cool. And you've now found your way very much into the security realm. I'm curious to know, would you say that you have a passion for security, or did you kind of land up there and now you just kind of like being in the security space?
I think when you come to Fireblocks, you really appreciate how much security is thought of in this space. I always tell people Fireblocks is a cybersecurity company at heart, and a digital asset platform business second. But I think given everything that's happened across the kind of crypto ecosystem over the last kind of 10 years, specifically in the kind of 2015 to 2020 era, where you have all these exchanges getting hacked for millions and millions of dollars, all these projects failing and leaving kind of investors and creditors without a cent or dollar in their hand. You appreciate how important security is for the long-term sustainability of this industry, right? No one who is a 100-year-old bank or a 100-year-old hedge fund is going to want to get into this industry if they can't have proper security standards. And that goes right down the way to how the private key is managed, how users can access their crypto in an organization and in a retail setting. So yes, I think I really have appreciated how important security is over the last couple of years, but more so within kind of the Fireblocks setup, whereby there's teams upon teams that spend day in, day out ensuring that the security of the platform is 110% always. Because when you're providing a security platform to big institutional customers, they're relying on us to make sure that their crypto is safe. And if something was to happen, then that kind of jeopardizes the security of our platform. That's something that we're very, 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 very serious about. And we have, like I said, a lot of resources spending, a lot of hours every day to make sure that this platform stacks up against the security threats that we see.
When we set up MidSquare, I think one of the things that the way we thought about the world was security was probably the most important foundational block for us to have in place, because it wouldn't have helped for us to take clients' assets and move them into the digital space, but then not have the most secure structure in place to custody those assets and look after them. and hence we came to Fireblocks. Now, if we start venturing into the basics of security, and there's a lot of technical jargon that floats around when you talk about security in crypto. I don't know how many people understand fully the notion of self custody. There's things like public keys and private keys. There's wallets and all the different terminology and jargon that comes with wallets. So if we start unpacking this as simplistically as possible, the first time I heard about a wallet, that's what I think about. It's the thing that sits in my back pocket. But wallets have quite an important meaning in the crypto world. So can you just give us a very simple 101 explanation of what is a wallet in the world of digital assets?
Of course. I mean, the best way, and my mum, who doesn't really understand what I do, I've kind of learned the hard way that I really need to break this down and explain it to someone who would be a 2-year-old to understand what a crypto wallet. But essentially, you can think of a crypto wallet as a folder, and that folder is very secure, but it really is the way that you will keep your password or your private key safe, which allows you to access your crypto on the blockchain. So really, the easiest way to think about it is, it's a wallet that stores your private key, or in other words, your password or your PIN code, to access your crypto. And that wallet is there to keep your crypto safe and accessible. Okay. Now, beyond the kind of security aspect of it, you will need a wallet if you want to send, receive, or spend cryptocurrencies like Bitcoin and Ethereum, right? So wallets in general come in many different forms. I think, like most people, they're used to the one that are kept in their back pocket or their side pocket, which houses their cash and their cards. But crypto wallets come in many different forms. Okay, whether it's like a hardware wallet, like a ledger, which looks like a USB stick, or if it's like a Fireblocks wallet, which is a wallet on a mobile app, which makes it easy for you to use crypto, whether it's sending this to a liquidity provider or to an OTC, or if it's your retail user when you want to send some crypto to your friend, or you want to buy some crypto online. There's many different uses, but
Okay.
in essence,
So
it's a way or a mechanism to go ahead.
okay, I'm going to ask you a couple of really dumb questions now.
Okay.
So the wallet holds my private key,
Yeah.
and my private key is it's the passcode that allows me to access my crypto. But
Yeah.
does my crypto then actually live on a blockchain and not sit in the wallet? So if I have the wallet that I carry around in my pocket, my cash sits in that wallet. But is it fair to say that in the crypto world, that digital currency actually lives on a blockchain somewhere, and the wallet just holds the secret password that allows me to access it on a blockchain or transact with it?
You're exactly right. So the actual crypto, like your Bitcoin, Ethereum, whatever it is, doesn't actually sit in this wallet, which I think, is something that many people can confuse with the crypto wallet. The crypto wallet is the wallet that keeps your private key safe. And that private key is like I said, the easiest way to think of a private key is like your PIN code when you want to take out cash from an ATM machine, or your PIN code when you want to log into your online banking, right? Your actual dollars or euro don't sit in your mobile application on your phone. They sit in the Bank of England or the Bank of South Africa. It's just that PIN code or private key that allows you to access that wallet, which can then allow you to send, receive, or transfer your crypto from your wallet to another wallet, or to an exchange, or what have you.
Yes. And in crypto world, it's that private key that I have to guard with my life, because that's the thing that allows me to do anything with, well, to prove that the crypto is mine and to do anything that I want with it, right? So security in the crypto world is about protecting your private key.
It's about protecting your private key, yes. There's many other things that you need to protect when we think about an organization in crypto. But yes, as a retail user that literally just wants to access the crypto markets, the private key is the be all and end all in terms of how you will access your crypto, how you will send it, and keeping that safe is is very important. You wouldn't want to, write down your PIN code for your bank account on a piece of paper and just leave it sitting next to your desk or sitting next to your cup of coffee in a restaurant. And obviously, you wouldn't want to do the same with a private key. Now, I don't think most people will realize what that long string of numbers is, but you may be unlucky and someone might catch that, and you could be in a lot of trouble, and you could be out of a lot of money as well if your crypto gets stolen. But yes, private keys are very important within the kind of wallet space.
Okay, good. Now you touched on it briefly in some of your explanation there, but when you talk about wallets, I think firstly, it's fair to say, like for retail users out there, if any of our listeners wanted to go and start playing around in the crypto space, they wouldn't start with something like Fireblocks. They'd probably go and download a wallet like MetaMask or Phantom Wallet, or something to that effect. And would I be right in saying even if they were to buy crypto on Binance or Luno or one of the big exchanges, they would have a wallet on that exchange as well? So there's, I guess, two questions in there. There's a number of apps that you can download now as wallets, or that provide wallets for retail users. And if you are transacting in crypto on an exchange, you also have or a wallet built in on that exchange as well. Is that correct?
That's correct. Yeah. So from the exchange side of things, if you are a user of Binance, Binance will provision you a wallet that they will manage the private key on behalf of you. If you want to trade on that exchange, if you want to be, if you're maybe a little bit more kind of experienced, you might download a MetaMask wallet, which is a wallet used to interact with the Ethereum blockchain, and you can access this through on your browser or on your mobile phone. But yes, most exchanges will provision you a wallet, which makes it easy for you to kind of get started and get up and running on crypto.
Yeah, and what do you think of the idea there of even the discussion we just had on the importance of guarding that private key, and the comment you made now that centralized exchanges effectively manage those private keys on your behalf? Are there risks to people being exposed to centralized exchanges or keeping crypto on centralized exchanges, given that they manage your private keys on your behalf?
There are risks, and I think over the last year or so, we've seen what those risks are. FTX is a great example of it. I think it's talked about most in reference to your question that you just brought up. But yes, obviously, if you are keeping your digital assets on an exchange, you are trusting that the exchange has the appropriate security measures, compliance standards, the right staff to ensure that they can't access your crypto and run away with it. So yes, there's many things that you are essentially trusting an exchange with when you opt to use them. Now, obviously, we expect a lot of these exchanges that have been around for a while, the Coinbases, the Binances, the Krakens, they have all the relevant licenses and security certifications that me as a retail user, or you as a retail user, would trust that their internal practices are sound. And that's not to say that things can go wrong. So depending on how many assets or the value of your assets that you're holding on an exchange, you may want to move those assets off the exchange quite regularly and keep it on a hardware wallet, which is in total control, in your total control. But I think for the kind of average user that has a couple of £100 or a couple of $100 on an exchange, I think the risks are fairly minimal. The only risk is that if you forget your login details, or if you forget your backup phrase, which allows you to access your account, that's when things may get a bit tricky. But by and large, I think after the FTX scenario, we've seen a lot of pressure put on these exchanges from the regulators in the specific jurisdictions that they operate in to ensure that client funds are segregated. There's no commingling of funds, and there is the right kind of KYC and AML done on employees coming in and having the right certifications to be dealing with people's assets. Because ultimately, you wouldn't like to see all your funds leave your bank account, your fiat bank account, and completely disappear. And it's the exact same for crypto. It shouldn't be any different.
Yeah, absolutely. Okay, now there's a number of types of wallets. So we're gonna try and go through these a little bit, and you can explain it to me like I'm 5 versions or answers to these. the difference between hot wallets and cold wallets?
Yeah, so a hot wallet is one that's is a wallet that's online that can be easily accessible. Whether it's typically a hot wallet is something that you will have on an exchange. So your Binance wallet will be something that you can log in, access, and move your assets pretty much straight away. A cold wallet, or in cold storage, as some people like to say, is a wallet that is completely air gapped. And what that means is that it's not connected to the internet. So for you to access that wallet, you will need to go through quite a few manual steps, whereby you will. It gets quite technical, but essentially you are using your mobile phone and a laptop device to communicate with each other to move those assets from cold storage to hot. And really why people would use cold storage is because it adds that additional layer of security to ensure that if an exchange gets hacked, your cold storage or your assets in cold storage will need to kind of have several layers of security or authentication before anything can be accessed. So typically you'll see big companies have a mix of assets in cold and hot storage. But again, for the average user, you may have some assets on your centralized exchange account, and you may have some of your assets in cold storage on a ledger device, right? That's the kind of the simple explanation of it.
Okay, and for the uninitiated, Ledger is a company that manufactures hardware wallets that look a little bit like USB sticks.
Correct.
Okay. And I mean, having dealt or worked with hardware wallets or ledgers, whatever you want to call them, they feel a little bit archaic. They feel like we've gone backwards in technology. Would you say that we're still like very early in terms of user friendliness and how we go about making security and wallet technology easily accessible for the uninitiated in crypto? What are your thoughts on that?
I think we're getting better as an industry. One particular company that has done this really well is Revolut. Revolut is a kind of a neobank that is based in the UK, but has kind of global presence everywhere. They launched their crypto product. I want to say like 4 or 5 years ago. Don't quote me on that, but it was a while ago. And the user experience that they have created for the uninitiated who may just use it as a bank account, Revolut as a bank account, can now really access crypto in a much kind of easier, friendly, and secure way, right? So it's as simple as kind of, again, logging onto your bank account. You'll just have the option to buy or sell crypto. And that is the way to kind of bring the next 100 million people into crypto, right? Having a really easy way that removes the complexity and removes the jargon typically associated with the private keys, the seed phrases, the cold storage, the hot storage, and these businesses are really driving the innovation from the retail level to help like I said, the next kind of 100 million people get involved in crypto and really understand why it's the kind of next generation of currency.
Right. If we talk about hardware wallets and software wallets, those are pretty much the same as hot and cold, right? Where hardware are the cold wallets and software would be the hot wallets.
Yeah, so like a hardware wallet, maybe a cold storage wallet, and like I said, the easiest way to think about it is the private keys that are kept in the wallet are kept offline. Okay, so they're not online, they're not easily as accessible as a hot wallet, whereby a hot wallet is a wallet that's online. The private keys are kept online, and the accessibility aspect of it is a lot easier because you can go in, log in, you can type in your password, and then you can start moving your assets around. Whereas cold storage has a little bit more of a kind of manual effort involved when it's kept offline.
Okay. Let's talk about multi-sig wallets. So just give us the definition of multi-sig and tell us what a multi-sig wallet is. We're getting a little bit more complex now. So let's see how we do on the simplicity.
Sure. I mean, I talk about this day in, day out. So if I don't do a good explaining of this, you can probably hand in my P45. But multi-sig, is within the kind of blockchain space. There's different ways for private keys to sign. Multisig is one way of doing it, and the kind of easiest way to explain it or to understand is that it's a digital signing process, okay, that enables 2 or more users to sign a transaction as a group. Okay, so if, for example, I don't know, let's say we're a hedge fund, and the head of trading initiates a trade to move 100 BTC to Kraken, which is a centralized exchange. If we're using multisig, myself and yourself, Nurse, and maybe the designated signers, and we each have a private key that is used to sign that transaction. Okay, so typically multisig, it's multi people or multi signatories, which will be required to sign a transaction when something is initiated. Okay, now multisig was introduced back in 2012 when the blockchain and cryptocurrency space was very, very different. For example, Bitcoin was the only cryptocurrency kind of available around that time. So the concept of creating a security technology that would work across multiple blockchains was irrelevant. So multisig really was designed initially for Bitcoin. Obviously, since more and more blockchains and networks have kind of been created, Ethereum, Solana, all these other ones, multisig traditionally has struggled to keep up because each implementation is different, given that it was created for Bitcoin, right? So you'll have some issues, and there's been many issues in the past with the multisig implementation whereby it was done incorrectly and wallets have been hacked. Listeners can go and research the Parity wallet, which was a multisig implementation, and the hacks involved there. So yes, I think there is some security around it, but we see the next generation of kind of wallet technology and wallet security within the MPC space. So if you don't mind, I can kind of talk about the MPC space, which essentially stands for multi-party computation. Again, it's another signing technology or cryptographic technology that allows multiple parties each hold secret information by way of a key share, and then solve a problem or a transaction or a message that requires the input of all of these secrets in a decentralized way. Okay, so think of it as, we talked about the private key. You have one private key or 2 private keys in the multisig element. With MPC, there's one private key, and that private key is split into 3 different pieces. Okay, and these pieces are known as key shares or key shards. And each of these key shards come together and solve this very complex mathematical problem that will essentially enable a transaction to be signed and broadcasted onto a blockchain. Okay, why this is kind of more secure these days, and in Fireblocks we like to say this is the kind of next generation of cryptographic technology, is that the private key never exists in its entirety. Okay, so what that means is that if you're a hacker, internal or external, it's very difficult to hack the private key because it doesn't actually exist. Okay, each key share is kept in a different place, it's encrypted, so it makes it very difficult for kind of a hack to occur. So Fireblocks kind of really preaches this ethos of MPC. We've actually created our own implementation of MPC, which is open sourced, peer reviewed, and kind of is the next generation of kind of signing security within the space as well.
Okay, so let me try and do a little bit of a idiot's guide recap here. So private key it's like my PIN in the digital world. It allows me to sign a transaction. So if I want to send you 10 Bitcoin, 10 of my Bitcoin, I will use my private key to sign the transaction, which confirms my consent to let the 10 Bitcoin go from me to you. That private key is secured in my wallet.
Mm-hmm.
And that's if I'm a retail user, that could be something like a MetaMask or my account on a Binance or a Kraken exchange or something to that effect. To make that process a little bit more robust, you can do something in the multisig space where for me to sign or for me to send you 10 of my Bitcoin, I use my private key to sign, and I get my business partner, to use his private key to co-sign that transaction, and it can only be sent if both private keys sign it. In the MPC world, the private key, instead of using multiple private keys, you have one private key that's effectively broken up into 3 shards and stored in different locations and encrypted, which makes somebody stealing that private key or figuring out what that private key really difficult to do. When we need to sign a transaction, those 3 shards of the private key need to come together, solve a complex mathematical problem to, I don't know, I'll say oversimplify, or decrypt them to allow me to then actually sign that transaction to send my 10 Bitcoin to you. And those 3 shards can be held by different people, so that they can only be put together when all 3 people or 2 of the 3 people agree to bring their shards of the key together.
Exactly. Yeah. Well, there's when the kind of the quorum aspect or the people aspect, we require, or MPC requires, 3 of the 3 key shares to come together. So not 2 of 3 or 1 of 3. It's always 3 of 3, which makes everything a lot more secure and absolute, because in some implementations of MPC you may have 2 of 3. We being Fireblocks require 3 of 3, which is why we kind of classify us as the best in class security when it comes to wallet technology.
Okay. So as things stand today in the crypto world, MPC is pretty much the bee's knees of security or wallet security, and Fireblocks in terms of its implementation, which I think you said there is open source and auditable by anybody, and the way you've implemented it would be the gold standard in terms of securing private keys in the crypto world.
Correct. Yes. I mean, MPC is one aspect of it. The security philosophy of Fireblocks is a multi-layered security philosophy. So MPC is great, but we have many other layers beneath MPC, which further secures our customers' assets when on the platform. Okay, so like I said, MPC is a way to kind of keep the private key very secure, given that it's distributed. But in addition to that, those key shares obviously need to be secured as well. And going back to my point around encryption, we're using Intel SGX, which is basically a way to encrypt each of these key shares using chip level hardware, which prevents anyone coming and extracting that key, which can be done in other implementations. So that's kind of the second layer. And the third layer, if you didn't think that was secure enough, is that we have what we call a policy engine. Okay, so this is a way for a business to set up specific approval policies for every transaction. So to give you a very simple example, when one trader may make a transfer of 10 BTC to an external wallet, it will require approval from both myself and yourself, Nerson. So again, you have 3 layers which act as different security checkpoints along the way. You have the key shares, which are distributed and all need to come together to sign. You have the encryption of those key shares, which prevents any key extraction from an internal or external threat vector. And then you have the policy engine, which is almost the rules engine or the compliance standards that you have in your organization that you want to implement into your wallet's security as well. So,
yes.
So you very much kind of a multi-layered approach, which we think we think stacks up against the best out there. We don't think anything's perfect, so we're constantly iterating and adding new features to make sure that anything new or dangerous that comes out in the industry today, we're very much protected from that.
Okay. And Mick, would it be fair to say that Fireblocks has never been hacked?
Correct. We're very, like I said, we're very security conscious, both from internal and external threats. I think the amount of time and effort and money that's poured into the security of Fireblocks is incredible. And like I said, I really didn't appreciate how important security was, both from an external and external perspective, until I joined Fireblocks, and that very much stands true to today. We're very much a cybersecurity at heart and a digital asset company second.
Okay, cool. Let's talk a little bit about Fireblocks then. Can you share with us the origin story for Fireblocks? When did Fireblocks start? Who started it, and what inspired Fireblocks coming into being?
Yeah, it's quite an interesting story. So our founders, our CEO Michael Shalov, was working for a previous company in the cybersecurity space, and they were actually employed to come and investigate a hack in I think a South Korean exchange, and that hack was for a big sum of money. So this company was to come in and do the retro and understand what happened, why did it happen, how can we prevent something like this happening again. And this was kind of like the light bulb moment for Michael to really say, there isn't really an enterprise grade solution out there that protects digital assets both at run and at rest time. So this kind of was the kind of light bulb moment, as I said, to go off and start thinking about, well, how can we create a secure and easy way for any business to kind of securely manage digital assets. So yeah, a couple of months and a couple of years went by, and we came out of stealth in 2018. And I've been around for about 5 years now. We work with over, I think, 1,500 different clients spread across many different industry verticals, stemming from traditional finance, BNY Mellon, oldest custodian of the world, using Fireblocks to securely manage their digital assets or their clients' digital assets, to the Revolut, Robinhoods of the world, to big hedge funds and exchanges that are trusting us as the kind of security layer for their digital assets. And today, I think we've securely transferred over 4 trillion worth of digital assets, which, when you think about it, is almost 20% of the overall crypto market flow. So Fireblocks really has an important role to play, and I think that from an infrastructure perspective, like you said, we're seen as the gold standard because we've kind of secured so many assets at scale, but we're also working with the biggest names in the crypto space, as well as the traditional finance space. So it's been a really interesting ride so far. The initial use case that we focused on was obviously custody, but your custody technology, should I say, but since then, we're focusing now on payments. Tokenization is a big use case that we're working on with clients. Web3 again, which is really interesting. And then from a DeFi perspective, providing the security and access in a really kind of secure way for many different participants has become a really kind of interesting and a successful use case for our platform as well.
Okay. With that sort of breadth of let's call it industry verticals, like you said, that you're working across, you probably have a pretty good sense of how traction in the crypto world is coming along in various angles. And Fireblocks have been going for the last 5 years. What's your sense? I know we came out of a pretty brutal bear market in 2022. Let's call it early 2023. And things have been going really, really well again since October for the crypto markets. But your sense of traction, you spoke there about a number of interesting themes like real world assets, tokenization. I assume when you talked about tokenization, that would include tokenization of securities and real world assets. What is your sense of traction across the board? Web3, tokenization, crypto, DeFi, all of those things. Are you seeing growth in your client base? Are you seeing more and more interest from new market participants? How do you see the world evolving from that perspective?
Yeah, I think it's encouraging to see the growth across all of these different industry verticals. I think some are growing faster than others. Specifically, tokenization has been the talk of the town over the last couple of months. You see now BlackRock are coming out and talking about launching a tokenized fund, access to different tokenized assets. Many other big players, specifically in the States, big fund managers over there, are looking at offering a way for investors to access tokenized money market funds. Also, Fireblocks have worked with the Tel Aviv Stock Exchange around different tokenization use cases. On the banking side, ANZ and NAB used Fireblocks for launching a stablecoin, which obviously involves some sort of tokenization element. So I think tokenization is definitely a prominent use case for Fireblocks, and the interest there has been really, really immense. I still think there's a work to do on the regulation side of things and how those tokenized assets are regulated, how they're kind of legally understood in different jurisdictions, which I think will come with time. But I think from the Web3 space, we're working with some really interesting household brands that you would know, that are looking at new ways of attracting new customers, existing customers, and offering ways for them to become more loyal via NFT drops, airdrops, different sort of things that you would expect to see within the Web3 space. So I think the stark contrast between each of these different verticals is so interesting when you see household brands and big corporates looking at, well, these are 1,000-year-old companies now offering NFTs to the users versus 1,000-year-old banks or 100-year-old banks offering a tokenized asset to investors. So I think the innovation and traction within each industry is definitely there. Like I said, some more than others, and I think this really is down to how legally governed will each of these assets be, right? And what sort of standards each of these use cases and organizations need to adhere to. But I think across the board, it's definitely growing in all aspects.
And is Fireblocks diversifying its business into these other areas away from security, or is it the case that security is kind of the golden thread that runs through all of these things you've spoken about, whether it's tokenization or NFT implementations? Which of those two would you say it is?
I think it runs through all of them. I think, like I said, you can't have a business, or you can't have a vertical within your business if it's not secure, right? So at the forefront of every single use case and product that we have within the Fireblocks stack, security is the be all and end all for us, right? Now, obviously, to make sure it works and it scales is another thing, but the security aspect, for one, is definitely what we look at first. In terms of diversification, so within the tokenization space, we acquired a company called Blockfold late last year, which you and the listeners can read online about. But this really has solidified our tokenization capability from kind of the full life cycle, right? So this really helps us to work on even more complex use cases, offer libraries of smart contracts that are pre-built and audited to our clients and new clients. So from a diversification perspective, that's definitely something that we're looking at. I don't think we can just succeed by only focusing on wallet technology. We grow as the industry grows, and we understand that certain use cases may come to the foray, and we need to pivot and understand how we can better offer new services to our clients from that side of things. But tokenization aside, some of the interesting things that we're launching and coming out with this year, maybe which are interesting to kind of your side of the world and the trading side, is that going back to our first discussion around counterparty risk and centralized exchanges, we've seen a massive demand from our clients to have a much more secure way to trade with exchanges. Okay, so we've launched something called Off Exchange, which essentially enables traders to trade on the exchange that they're connected with, but not have their assets actually sitting on that exchange. So essentially, you as the trader keeps full control of the assets, but you have a credit line extended on that exchange to trade whatever assets you want to trade. Only when it comes to the point of settlement do the assets move from your control to the exchange, or vice versa. So really what you're preventing here is another FTX scenario whereby an exchange prevents or suspends withdrawals, goes bankrupt, and again, we see this as another layer of security that is kind of very, very important to the industry as a whole.
So what you're offering there is a mechanism to have the security that Fireblocks provides, but the user interfaces and functionality that traders would enjoy from the centralized exchanges.
Exactly. So the traders will still be trading on their centralized exchanges. The only difference will be is that the assets will not be in the exchange's control. They'll be in the control of the traders sitting in a wallet on Fireblocks. So again, from a counterparty risk side of things, I don't think you ever have 100% counterparty risk protection, but we think that this really helps get to that 100% level as much as possible.
Okay. Let me put you on the spot. When we saw the launch of the spot Bitcoin ETFs in the US in January, well, actually the application started going in the back end of last year, and I think it was pretty clear from most of the applications, not all of them. I think the bulk of them used Coinbase for custody. think a couple of them are doing self-custody, like Fidelity, if I remember correctly. We were wondering, or a little surprised at the time, that Fireblocks wasn't considered for security there. And I think, at least from our understanding, we would have thought you would have been an ideal custodian for some of those products. Did you have any thoughts on that, or how did you see the world from that perspective?
Yeah, so I think it's important to note that Fireblocks is not a custodian. Okay, so we don't hold client assets on behalf of our clients, or hold assets on behalf of our clients, should I say, which is where that nuance is. Coinbase have the custody license, Fidelity have a custody license, others in the space have a custody license. So from the Fireblocks side of things, we're definitely working with participants that are involved in these projects that need a custody solution or custody technology solution. So we're very much active in that space. And I think, since these ETFs have been approved in the UK, we've seen LSEG now announcing that they're going to be supporting the listing of ETNs, which is a great step in the UK market. I think this is definitely going to further highlight the need for a secure wallet solution for those custodians that need to manage digital assets, right? So Fireblocks is always going to be there to support these custodians, but we're very much kind of not in the space of holding digital assets on behalf of our clients.
Right. So like you mentioned earlier, you would provide a service to Bank of New York where they custody digital assets on behalf of clients, but Fireblocks itself as a company won't actually custody assets on behalf of clients.
Correct. Yes, and this is kind of the ethos of our business since we came out of stealth. We just want to offer, like, our ethos is, allow any business to securely manage digital assets in whatever that business may be. If it's a 2-person hedge fund, if it's a Web3 company, if it's a Bank of New York Mellon, our solution is there to be used as the most secure solution in the market to manage, trade, receive, send digital assets.
Okay. Cool. Couple of closing questions then. Put you on the spot again. I'm looking at my screen. The Bitcoin price is hovering around $71,000. We're not asking you to give anybody financial advice, but do you have a price prediction for the end of this year?
Well, I didn't know it was up to 71 again, so that's encouraging to see. I think there's a lot more room to grow. I think we're only at the start of this ETF phase of the industry, right? So you've seen a couple of weeks ago there was 1 billion worth of inflows for these products in one single day or one single week, I think it was, maybe. Which is one day. There you go. You know more than me, Nerson. So this is just insane type of stuff, right? I think the last time we saw this, I think gold didn't even have that many inflows in a single day. So, you're really seeing this kind of next wave of interest and adoption within the crypto space. So, I think from a price prediction perspective, I'm not going to speculate on this, but I think a lot of people will be hoping it continues to go up. What that number looks like, who knows? But I think a lot of people are hoping it's a lot greater than 71,000.
Yeah, I would agree with you. And then finally, your thoughts on the future of security in the digital asset space. I know you kind of alluded to the fact that MPC wallet technology is pretty much at the bleeding edge of it now. Where do you see things going in future from a security perspective? What are the key things we still have to solve and get right and innovate and improve on?
Yeah, I think there's a couple of things. I think we're seeing a lot of interest around on-chain identity, which I think is the next wave of security and identification within the crypto space. So actually proving that someone owns an asset or proving that something relates to a person on chain. I think that's the next step, and we're very much actively looking in that space as well. I've hired people to investigate that and how we can offer ways for our clients to do that. But I think we'll continue to see new iterations of ways of private key management. What they look like, I don't know. I'm probably not technical enough to even speak about it, but I think no security is ever perfect. And from the Fireblocks side, we're constantly looking at ways to improve our security stack, ways to make it more scalable. I think as we see the next wave of clients come on board our platform, we need to ensure the security stack can scale, and we need to ensure that we continue to innovate to make sure that it meets the demands of the need participants in this industry as well. So from a security side of things, I think the things will continue to become more and more secure, and I think as regulation becomes more clear within each jurisdiction, we'll have a clear guideline or template as to what good security looks like. But from the Fireblocks side of things, we're very much head down and ensuring that our platform stacks up against any security threats that we may face.
Great. Okay, Mick, thanks very much. You did an outstanding job of explaining the basics of wallets and private keys and security in the crypto space. We are proud to be partners with Fireblocks, and really excited about where you are going as a business, and what that means for us as a business and what it means for crypto on the whole. So really appreciate you joining us today. Thank you very much. And to the listeners, hope you have a better understanding of security in the crypto space, what a wallet is. Shout if you have any questions. We're happy to answer them. This is the Crypto Squared podcast, and look out for us next time. Thank you. Cheers.
Thank you, Nelson. Cheers, guys.
You hereby acknowledge that nothing contained in this podcast shall constitute financial, investment, legal, or other professional advice, and that no professional relationship of any kind is created between you and the Crypto Squared podcast team, or make decisions based in whole or in part on anything contained in this episode. Thanks for tuning in to the Crypto Squared podcast. Please subscribe so you never miss an episode. See you next time.